Good day, fellow investors. Celanese stock is down, the dividend yield looks good, the P ratio is extremely low, and we have crashed 50% in the past 6 months. And there were many comments asking about Celanese, about the sector. And let's look at what's going on, because the market is just going higher and higher, and all these companies related to the industry, to the automotive industry, is going lower and lower. Celanese is a very specific company. They produce materials for everything that we use in life, and when we look at their presentation, at what's going on, we expect demand conditions to worsen in the fourth quarter. So something is going on in that industry, especially as the automotive industry segments react to recent dynamics by destocking, and things are going then, and everything trickles down, but the S&P 500 is still focused on the bubble, AI bubble, and the reality is that things are looking ugly. Let's look at the last conference call, and I went into what they are discussing there, and they continue to focus on divestitures. So now that the market is bad, they are divesting things. They are expecting lower demand, thus lower prices, even uglier. So auto registrations in Europe fell 40% from June to August. That's something that hits the whole industry. New cars are just down 14%, so the automakers still expect improvements. The story with Celanese here is the mobility and materials acquisition from DuPont, where they paid 11 billion, and that now, as the sector is reverting, everything good, now things start to work against them. So they bought, everything was good, took leverage to buy something that DuPont wanted to get rid of. So for them it looked like a great opportunity, and now the chickens come to roost. And that's always something. Management is boring, is this. Let's take a big loan, let's make an acquisition, let's increase the jet we have, we need to go around the world. But what are they seeing? Less volume, less prices, and then suddenly the great acquisition they made looks terribly bad. And now the key issue is deleveraging this balance sheet to 3 times net debt to EBITDA. But if you have no EBITDA, you cannot deleverage, and here is where issues come around. Convert acceleration divestiture options to take some pressure off your deleveraging efforts. And when you're divesting with deleveraging, then you're doing fire sales, you're selling at wrong prices. So in summary, Celanese is a price taker, they depend on the market. In a downturn, everything backfires, and if you have debt because you were greedy, your profits are disappearing, your dividends are being cut 95%. If there is an upturn, great, but if we go into a recession, then this goes even lower, like a bankrupt, bad capital allocation, buying high, the DuPont, and now divesting low. If we look at the numbers, yes, they went for growth, but they are now toast if the demand doesn't come back. There is a lot of goodwill from the acquisition, and the only solution is that they need a revival, and fast. If this downturn in the automotive industry would have came 4 years from now, then it would be good because they would have already delevered. But now, with this high debt, selling at whatever price, fire sales, now the 11 billion they spent is maybe 11 billion lost. And that is what is reflected in the stock price, and the market sees that only when they cut the dividend. It's simply not something to bet on. If there is a recession, this goes even lower, then creditors start going into, and we haven't seen a creditor going into since 2009 because the Fed bailed out everyone. If the Fed isn't bailing out everyone next cycle, then you will only see the ugliness that is something normal in financial markets. So they need a revival fast. If not, it will get uglier. If yes, it will rebound. So no competitive advantage, no long-term durable competitive advantage, just a price taker, not for us value investors, despite the price being cheap. be careful. You can double your money on this, but simply it's not something that you will surely double your money on, which is the essence of value investing.